dollar dies, GBP rise. Let's break down all the key fundamentals. And obviously, there are plenty of talking points. Let's, as we always do, start off with the greenback here, guys. And obviously, let's refresh our memory, right? The dollar is vulnerable. Near term, the dollar is vulnerable. Remember, I said to you guys before, it has lost its near-term edge, and it's done exactly just that. Remember last week where I said it was make or break? Let's have a quick recap in a nutshell. Last week was make or break. Why? Because we had key inflation data. Now, ahead of this key inflation data this previous week, we had Jerome Powell, who was laying the foundation, right? Laying the tone, his communication to the markets that we're getting nearer rate cuts because we've made substantial progress on bringing down inflation. He gave us that clue. He did it. That's why you have to listen. He gave us that clue. We've made substantial progress. Now, fast forward to last week, okay, the week after. Here, remember, we had lower inflation data from the United States in the form of CPI. So let's just quickly take a look at here. Across the board, the numbers were lower. As you can see, that was a contraction there on the month from run reading, but they were lower across the board on an annualized level as well, inviting that added selling pressure for the greenback. So that was really the nail in the coffin to see us ultimately firmly committed on a committed level, breaking this key trend line that had been supporting the price to the upside since the commence of 2024. That edge has gone for now. Okay, that hedge has gone. So we are exposed to some downside. And as I said to you guys before, we'll keep an eye on this 104 area. This is decent demand. We've seen it here where the price bounced in early part of June. And we've seen it numerous times. This is a key zone. We can't deny that. But ultimately, if we do break this down, okay, whether we break out or towards mid 103 region, then get a retest here, and then make way to this next zone, which is that sub 103. It's sort of 102.80 towards 102.60. That could very well be seen. But either way, we are exposed now to coming all the way to the downside. Now, some would ask, why, Ken, did we not see a sustainable dollar rally yesterday after looking at Forex? If you look at Forex Factory there, just at plain sight, guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it because all this information is over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video on just being narrow-mindedly and focusing on these these month-for-month figures. They look okay, right? They're higher than expectations. They're still not great numbers. They're still not overly encouraging consumer spending, but they're still higher than expected. Now, this is where you need to sort of open up your mind and look at things at a bigger picture. If we look at the retail sales on a year-on-year level, right? Remember, annualized, stripping out all the volatility of on a month-to-month basis. On an annualized level, it still come out lower, okay? 2.3%. Okay, it's coming down from the previous 2.6% on an annualized level. I know, yes, it's slightly higher than the forecast there, but it's still gradually coming down, okay? And then when you look here on a month-to-month reading, this is including autos, including gas, where we have these X readings that exclude autos, exclude gasoline sales and autos. When you look here, the growth was zero, is no growth. Okay, so when you really get a gauge for things, we are still slowing down. We're still slowing down in terms of the economy. Remember, I've said to you guys before how we're seeing sort of cracks near term in the economy, signs of worsening in the labor market. Remember, we saw, unemployment rate ticking high. We saw wages coming down. Everything's still moving in the process of disinflationary. And that's the narrative the markets are really sort of got running with right now. And as I said to you guys already, we've more or less 100% priced in this rate cut for September, and now markets are thinking beyond September. Are we going to get a cut in November, December? Could we get more than one cut? Could we get 2 or 3? Markets are always looking for more. What next? Okay, so the dollar definitely remains vulnerable, and that little minor technical bounce, I said it already that this was just going to be temporary, this bounce. And that's exactly what that was. You know, when you see structure here, it remains to the downside for the dollar. We've started this path to the downside here clearly at the commence of July. You know, any period of consolidation, sell. Period of consolidation, sell. And it's obviously this latest period of consolidation, form a nice little flag there, sell. And obviously now we're breaking down this zone and it's allowing the dollar's peers to run to the upside. Now, obviously, we've really been capitalizing on the GBP longs. They've been beautiful. And GBP is one of the outperformers, which I've explained previously, right? I've gone over this in detail. But today, look, just quickly, to summarize, we've had new UK government coming in, the Labour Party. Okay, they're seen as bullish, right? Well, they've created some optimism, you know, from the Conservative Party that were in control before. We've had better GDP data last week from the United Kingdom, right? Growth was expanding faster than what the markets were expecting. We've had a couple of Bank of England members pushing back on expectations for rate cuts in August, which is about a 50-50 probability. They see it still too premature because inflation's still high. As you saw here this morning, year-on-year inflation coming in at 2%. Okay, markets are looking for that to cool. On a core level, it remains elevated at 3.5%. So this, you know, is all supportive of GBP upside. And when you look at GBP, you know, as I say, we've been really capitalizing, enjoying these trades to the upside, breaking out a pennant here, breaking out of a flag here, and just smashing through that psychological 130 mark, inviting some nice buying pressure. So it's been really, really nice to trade. And you can sort of drop it down on an hourly and just see how clean, you know, when we have these periods of consolidation breakout, period consolidation breakout, nice flag here, big breakout, nice flag here, breakout. And it's just been clean, okay? Really making sense and trending to the upside. So obviously with this dollar weakness, with the strong near-term fundamentals that we've seen of late for the pound, this has been supporting its aggressive move to the upside. And there's plenty of opportunities right now in the market, and just markets are really, really excited and are very pumped about this latest narrative with the dollar weakness of the rate cut. So that's just helping, you know, the dollar's peers, likes of Euro, likes of Aussie, NZD, all sort of gain some ground versus the dollar right now. So plenty of exciting volatility and moves in the markets. So guys, if you did find value in this video, I do go into things in a lot more detail on a daily basis, tying in the current fundamental themes, the current fundamental narratives and talking points, what's driving all the assets that you are trading in terms of their direction, and putting a value on them and looking at opportunities via the TFTC premium community. So you can check out the details below in the description of this video. And if you seriously want to level up your whole macro trading game, right, and understand on a simple and highly effective level of tying fundamentals in with your technicals, regardless of how you trade, you can check out my fundamental bootcamp as well. But please do smash up that subscribe button, smash up that like button, this lit button, drop a comment below, stay lit, stay blessed, let's get it.